Yo guys, it's John here with Option Lab. In this video, I'm going to be talking about how I got assigned $2.3 million in tech stocks. So as you guys know, the market has been experiencing some of the biggest drops in the last decade. And unfortunately, when you're selling puts, sometimes you end up on the wrong side of things. So in this video, I'm going to be talking about the three stocks I am now going to be assigned, what my plan is, and how to manage the wheel strategy when a large drop in the market happens. So I'm going to cover that all in this video. If you guys are not familiar with who I am, my name is John. I run Option Lab. I did roughly 2.3 million in 2024. I'll refresh my portfolio here for you guys so you can see it live. And if you have not yet joined my free Discord, click the link in the description below. The first 10 people to DM me print, I'm sending a 1-day free trial to see all of my trades, as well as this option selling cheat sheet that explains most of the strategies that I'm going to be talking about today. Okay, so let's get into this. So if you guys are not familiar with what I do, I sell option premium. So this is things like the wheel strategy, credit spreads, etc. And I'll quickly draw out for you guys what that would look like. So in this case, all three of these positions, I got assigned off of selling cash secured puts. So that would look something like this, right? You have a stock, and if it's moving like this, you would sell an out of the money put. In this case, I was selling roughly 20 delta puts, and you would collect a premium for selling to open that put. And as long as the stock stays above your strike price by expiration, you keep this premium and are not assigned any shares. But in this case, since the market crashed, the stock ended below my strike price. Therefore, I was assigned 100 shares per contract at the strike price. So let's go through each example, and I'll give you guys kind of like my methodology, and then I'll show you the premium I got for each of these positions and show you what my plan is with it. So in general, this kind of captures my methodology. I'm writing cash secured puts on stocks that I would like to own as they begin rapidly dropping. So in this case, I regularly follow AMD, Nvidia, and SMCI, which are the three stocks that I will now be owning a large amount of. And I kind of monitor them on a week-to-week basis. And as they approach levels on longer time frames that interest me, I then add cash secured puts in hopes of then being assigned shares to then either own long-term or then perform the wheel on, which I would write covered calls. So the next step is I'm choosing 7 to 14 DTE under 20 delta strike prices while the market is dropping. This allows for less time for something to go wrong and a larger cushion since the market is dropping, right? So 7 to 14 DTE, it's not too long, and 20 delta gives about an 80% probability that the strike price we choose will be out of the money at expiration. And then step 3, if I'm assigned, I'm selling covered calls and attempting to capture a quick recovery move. And if not, I'm averaging down with more cash secured puts to add onto the position. So let's go into the 3 examples here. So the first one is AMD. And as you can see here, this is the quantity. I sold 100 contracts of the AMD 4400 puts and collected about $4,000 in premium. Now, I did this last week, which in hindsight was too early because that was really before the big drop happened. So I did not get nearly as much premium as I would have if I had waited until the drop really started happening. So if you look at this chart here, I had 3 levels plotted out around 100, around 75, and then around 65. These are the 3 levels that on a long-term chart, which this is a 10-year chart, I'm looking to add shares, right? So instead of just buying them outright, I collect a premium for selling a put. And then if the stock does go below that, I'm assigned the shares and now I own them. So in this case, I made about $4,000 selling 100 contracts. Now, at the time, this was about a 0.1 delta, right? So about a 90% chance it didn't happen, yet it did, right? The market had a kind of almost historic move down, and that 10 delta quickly became in the money. So when you're running the wheel, there's always a risk of things like this happening. So that was about 4,000. And as you can see right now, AMD is around 85. So that's about 15 points in the money. And my plan here is, first off, I think the market will recover, even if it's for a short time. It usually just doesn't continuously have this massive drop. So if it does recover, I'm going to write covered calls on the shares that I'm going to now own and hopefully flip it for a profit. And that was about $1 million in capital to cover this 100 contracts of AMD cash secured puts. Next was Nvidia. This is another one I'm watching, same sector. Again, I have some levels plotted out here. In this case, I did the Nvidia 4400 puts, collected about $3,000 in premium, and the same story. At the time, this was about a 0.10 delta, super high probability until the market makes an outlier move. And now I'm going to be long a lot of shares of AMD, and this again was another $1 million in capital required to cover these shares. Plan is the same though. Hopefully the market will make a quick bounce and I'm able to write covered calls on these shares and get out. But if not, I am willing to own them long term. So lastly, SMCI. This is one that's gotten beaten down on the longer time frames. So I did the 4431 puts, collected again around 3,000 in premium. So between all three of these, it was about for about 10,000 in premium. And at the time, like I said, this was again like a 0.3 or 0.1 delta, but ended up getting assigned on it. So this one is a little bit closer, so I should be in better shape in terms of flipping out of it for a profit and writing calls and the wheel strategy. But nonetheless, we can go through three possible scenarios one of which will likely play out with these three stocks that I was assigned. So number one, if tech stocks keep plummeting, I can always hold these long term. These are not bad names to hold long term, in my opinion. Two, I can write slightly out of the money covered calls and attempt to exit if the market makes a short term recovery, right? So if the market bounces and tech stocks bounce, I can quickly get out of these shares, hopefully for a profit. Plus, I can collect tens of thousands of dollars in premium for writing calls on 100 contracts, right? And step three of the scenario three would be to average down and add to the position as tech stocks continue dropping, right? So in the case of AMD, if this continues to drop, I'll write more cash secured puts, average down into the position, lower my cost basis, and over time as I hold the shares and the market begins to recover, I can then write covered calls at a lower strike price since my cost basis will then be lower. Anyway, if you guys want to learn more about these strategies and you are interested in selling option premium, again, join my Discord. It's free. Link is in the description. The first 10 people to DM me print, I'm sending a 1-day free trial to see my trades. Like and subscribe, and I will see you guys in the next one.